What's going on, Money Morning Live? I have to say, it was hard watching Nick Black and not be on his show. It's been a long time since I've missed his show, but it looked like Brandon was having a good time. Something I did notice were tons of questions coming through. So what I'm going to say to you guys is, let's bring those questions over here to Tom Gentile's show because he's going to be in the main room for the next hour with me. Let's bring him in 5, 4, 3, 2.
Woo! Hey guys, welcome to Power Profit Trades. Tom Gentile here. It is Tuesday, January 18th, 2022. Hope you had a great day off yesterday. I don't even remember what I did yesterday. The day just went through so quickly and I did so little. Take that extra breather there going on with the market being closed. Anyway, we got a great show for you today. We're going to talk about a number of things. I want to go over a quick update of what's happening in the stock market and the crypto markets since I saw you last. I want to show you how I use my free trading tools, which are available to you both here at Money Morning Live as well as my YouTube channel. We're going to start to build a list of names with possible trading ideas. I want to drill down on options primarily that have cheap implied volatility and why I think that matters right now, okay? Going to take your charts by request, and I'm going to leave you with my top trade idea here as we end the hour, all right? And that's before I go hang out with my subscribers. So let's go ahead and get started with a live market update. So guys, you all know the market ended the week on a sour note. We know that. I got some bullish trades that are still doing well. My AMAT call spread up about 64% at Friday's close. We'll take a look at, I want to get into the sector. I want to get into the most popular stocks, but I also want to get into, the biggies, stocks, bonds, currencies, commodities. Definitely want to take a look at what's going on with BTC as well. Crypto space is tough. However, is there a bottom forming right now around the 40,000 mark? What do you think? Okay, I'll let you know what I think. Nick lets you know what he thinks. I want to know what you think about BTC and where it stands today. We'll take a look at a chart of BTC as well. All right. My YFI pick was in the green last week. I got positions on BTC. I got positions on ADA, Cardano. Yes, they're in the red. But guys, I got to tell you something. I got 100,000 reasons why I believe the long term still looks fantastic for the crypto markets, and I'll be sharing that with you later on, okay? Today's focus isn't crypto. I want to get into market insights. So why don't we start with an overview of what's going on in the markets right now. So take a look at SPY here, and we're looking at a 100-day chart, okay? Now, I don't spend the majority of my time day trading. Let's get that right out of the gate. So because of that, when I'm looking at an overview, if I'm looking out the seat 3A of whatever flight I'm on, and I got the window seat if I'm in A, I'm looking over, I'm looking over the clouds. I'm looking at whatever the landscape is that I'm looking down at. That's what I'm doing here with a 100-day chart. When I'm looking at the markets as a whole, I look at a minimum of 100 days, sometimes a little bit more. As you can see, S&P kind of had that support at 130. We've also got support at, 430, 450, 455, and then, of course, then we start hitting resistance lines. We're well below resistance lines. Again, open down again. I saw the Dow down around 500 points or so, give or take, before coming on the show. And as I'm looking at this, and you can see here the latest snapshot at the top of the hour shows that we are down near the lows of last week on SPY. I've got support points right here, 455 round number support, and then just above 450. These represent areas of support when you go back and you look at the 100-day chart. All right, support back in October, resistance back in August. So we put these support resistance pieces together, and we create something on our charts called stock chart peaks. Now, Eric, have you ever heard of the term stock chart peaks?
No, I have not, but I get the feeling that I'm about to learn about it. So fill us in.
Yeah, so So you know what stock resistance, support and resistance are, right?
Basics
You
of
know,
it.
you look
Yeah,
at
the basics.
yeah, baseline support, lows, baseline resistance, highs. And if you take
Hmm.
a look at the S&P, you can see here, you see a stab all the way up there to that 480 level before we ended up dropping off. Now, why are these dotted lines not at all-time highs or all-time lows? I'll tell you, because our stock chart peaks primarily rely on the closes of every day, not the candlestick high or the candlestick low. You know, I come to think that if you look at the wicks and not the body, you know, every time I look at a wick, I get burned. Uh, Candlesticks burned. Get it?
I
Here's the
get
thing.
you.
You know, so to me, the most important 2 hours of the market are the first hour and the last. And if we call the first hour the amateur hour, and you kind of have to, because if you see what goes on in the markets, the bids and offers are wide on the open, and they start to get closer and closer together. All right, so the first hour is amateur hour, and it sets up what the rest of the day is going to happen. Okay, how that's going to unfold. I look at the last hour. The last hour to me is the most significant if you're looking at daily charts. Therefore, I take the close of these days, and we put these together, and that's how we come up with these stock chart peaks. So the black lines you see up here, they're just peak resistance. I'm only looking at that if the market's heading higher and heading toward one of those black lines. The blue lines are peak support. We're getting close to peak support right now in the S&P, 455. That's a good round number for peak support. That's what we see happening. Now, the other thing I see happening too is that we got a bearish cross on the 10 and 30-day moving average. Now, typically, that to me, that's not a sell signal, okay? It just tells me that right now, you know, it's not as easy to be on the buy side of the markets as we typically look at. For me, I would look at the 200-day moving average and as an area whether or not we really are perhaps going down. We're coming close to that 200-day moving average. If we were to kind of take a look at, let me change the long to the 200, right? You can see here 200-day moving average way down here. Actually, what we're getting close to is the 50-day moving average. But we got a ways to go. I mean, before the institutional money starts saying, wait a second, maybe we are getting a complete change in direction on the equity markets. Look at the 200-day moving average. We're down here below 440, or excuse me, just above 440. So we got a good ways to go before smart money says, hang on a second, there's some changes that are happening. Right now, between now and then, this looks like pullback buys that are potentially happening. All right, so that's the S&P or SPY. I'm going to move on. Let's take a look and see what's going on in the bond market. Now, this is a cause for concern. When you see the bond market now making new stock chart peak supports, which is what this blue line is doing down here. This blue line is hitting the close of the current bar. Now, we haven't closed the market up yet, but when you're down here, that's a concern. What's the concern with bonds going lower? That now there's more and more reason for the Fed to raise rates, and now we're hearing 4 times. I told you 3 times last week. Now there's a concern that the next 4 Fed meetings, we may see interest rates go higher. Again, why is that? Because there's a concern that inflation is spiraling out of control and that the Fed is not doing anything about it. The big question that's on my mind and everybody's mind is, when is this going to start? When are they going to make the first move? And if you think about that, you got to look at Omicron, okay? Here's my thought. If we see Omicron start to come down, peak and come down as fast as it went up last month, and I believe that's going to happen. I told you last week, I think by Valentine's Day, this is a rearview mirror thing. But depending on how fast it happens, might let the Fed know if it's out of the way, we're raising rates. If we're still hitting some highs, they may tap the brakes once. We'll see. Right now, the bond market's saying, no, it's full speed ahead. We're definitely going to see a rate hike here on the next Fed meeting. Look at USO, though. USO, this is the oil markets, not having anything of that. In fact, it is powering ahead. All systems go, as last week we busted above the multi-year highs. Remember, you got to go back. You got to go back to look at 2020 if you want to see the oil markets at any significant highs, and it's got to be at the beginning of 2020. If you remember, in May of 2020, you couldn't give oil away. In the futures markets, it was to the negative for 1 month. Now, that's all behind us. All right, we saw the pullbacks that happened in November. We hit some significant areas of support. All right, we double line support here at 54, and now where are we? New multi-year highs, trading above 60 for the first time since early 2020. Right? Again, we have no resistance right now. If you look back in the last 2 years, almost last 2 years, no resistance. So all things point to higher prices in oil. Again, another reason why the Fed may need to step in and raise rates. All right, let's look at the mystery chart. The mystery chart is what I call GLD. We've been talking about this for some time. All right, what I mean by mystery chart is that this does not seem to have any trend at all. You go back to last summer, and we're sitting in the middle of the road here between 165, 171. We dropped below that for a few weeks back in September, and then moved back to the middle of the road, back to all of a sudden on the other side. We'll call that the left side. Back to 174.5, back to the middle of the road. We're back in the middle of that road once again, but leaning on some very good, very solid resistance at 171. We've hit this. We came close to it last week. We're backing off. I believe we go through that. All right. We have right now a couple reasons I believe that's going to happen. I think gold is the quiet asset that is now the value asset. All right. When you look at two value assets in the market out there right now, in my opinion, GLD and gold is one, with silver being more of the poor man's gold asset. You know what the other one is? BTC. BTC is the other one, right? And when I look at crypto, and again, like I said, today's not the day that I want to dive into the cryptocurrency markets. But when I look at crypto, you know, I've got to go back and I've got to look, and let's just go there right now. Let's get into cryptocurrency. I know we want to move on here, Eric. How are we doing on time as I'm moving over to BTC?
You're doing great. Now, I mean, you know I'm a crypto guy, man. So I always like when you jump into cryptocurrencies. Take as much time as you want here when you're looking at the Bitcoin, man. Cool. I mean, it's low right now. Looking at Bitcoin's prices right now, 41,007 and change. You know, it's definitely in the red, actually, for the last 90 days.
I love it at this level. I love it at this level because we're tapping on these lows that happened back in September. Here's your September lows, just above 40,000. Here is the lows that happened in January where we stabbed down into the 39 area, but we have not really closed. If you look at the cash price of BTC, everybody says, "Oh, it's at 39. Oh, it's at 39.5." You know, that happened for all of, I think, an hour maybe. But every time it dropped below 41,000, we jumped right above it. We have not had a closing price at 41, but this is some really good, this 40,000, 41,000 area is a really good area of support. And like I said, I'm going to be doing a fairly big purchase here, and I'm going to be doing that live, all right? I'm going to be doing that live here very soon. We'll talk about that. Right? We typically do stuff with crypto on Mondays. So maybe it'll be Monday. Maybe Monday I'll pop in here and I'll log into Coinbase or Coinbase Pro, and I'll throw out there the biggest trade that I can do on a daily basis. And I want to make sure you're here live because I want to show you how to do it. I'm not in any hurry. All right. If it's up $1,000 or $2,000 or down $1,000 or $2,000, I really don't care. All right, because I'm more interested in this case, the long-term aspects of cryptocurrency, not the shorter term. The shorter term, I leave that for the tradable coins. And what are the tradable coins? Well, there are about I'm going to say there's probably about 35 or 40 that we look at as tradable instruments out there. We'll save that for another day. But Eric, your thoughts? I mean, you're a crypto guy.
Yeah,
I like BTC at these levels.
I mean, I don't see it going much lower than this. I mean, could it go down into the, 39,000 again? Of course. I mean, it can go even lower than that, but I'm pretty comfortable now that we're pretty much at the floor. And for me, if I had some money to invest at this point, I'd be dollar cost averaging into some Bitcoin for sure. It's probably the most stable of all cryptocurrencies and the one that you could kind of put your money into and feel fairly confident that it's going to go up over time. And I think now, if you're looking to get into Bitcoin, it's a great time.
Yeah, I do too. And here's the other thing that I look at. I'm going to share this with everybody right now with our last few seconds on the clock with BTC. Risk reward. Everything I look at is all about risk reward or probability. The risk that Bitcoin goes to zero, I believe, is very, very low. You'd have to fractionalize that down below 1%. So what are the risks that it could go to 30,000? That's higher. That's higher than 1%. Here's what I look at. If I were to purchase BTC at 40,000 using a 10,000 point risk, well, what's our upside? If our upside, and I look at upside as we get above 67,549, which is my closing high that you see on the chart there, we get above that, I think 70,000 is a lock. So I look at 40,000, 50, 60, 70. That's 30,000 points up with a 10,000 point potential drop. That's a 3-to-1 reward to risk ratio. That's what I'm looking at right now with BTC and everything that I see just on the technical side. All right, Eric, where do we go from here?
Yeah, Tom, we got to get into some of your tools. I think it's time we start looking at that. I'm going to give you 16 minutes, Tom, to do it. Not a minute less, not a minute more.
16.
Listen, we're messing with the timer right now, and I kind of like it. So 17 minutes, and we're moving on to your tools, man. Why don't you fill us in on what this is all about, what you guys are doing with this?
Cool. So, guys, obviously, as an option trader, we like to focus on the best buying opportunities. And one of the ways that I can share those with you when I'm not here, because I'm only here, with those of you on the main screen, 3 days a week, an hour a day? What about the rest of the market? What about what happens Thursday, Friday, afternoons, the time I'm not here with you? You want to follow me. If you want to follow me, during market hours every day, how about following me through some of the tools that we use? So I have something out there which is called Tom's Option Tools. And we have an app on Tom's Option Tools that you can follow me with, and it costs you nothing. Let me explain what I'm talking about. So here it is on my phone. There's me and my wife. That's when we're out in Oregon. And but up there, yeah, up there in the, I want you to focus on that little thumbnail up there. Tom's Option Tools.
Tom, no one's looking at the app. Everyone's looking at your wife in the picture. Let's be honest now, man. You're showing off your wife right there, Tom.
Oh boy. All right. So where I want you to go though, guys, is if you have a smartphone or you have a smart tablet and you want to follow along with some free tools, which we update every single day. If you go to tomsoptiontools.com, search for Tom's Option Tools on the Google Play Store or the Apple iPhone Store. And what you're going to do is you're going to come to an area where you can download. It doesn't cost you anything to download it. You're going to come to a login page. Now, if you're already part of our software, all right, which many of you are, you just use your username and password, you log in, and that'll open up the app. But if you are not currently using our software and you want access to the free app, here's what you're going to do. Down below the login, you're going to see non-subscriber login. Click in there, fill out some information, and you get access to inside the app. Now, when you go inside the app, you're going to see, Eric, pop my screen up if you haven't already.
We got you, bud.
You're going to see something called Tom's Option Tools Morning Report. Okay, so Tom's Option Tools Morning Report is going to be, once again, it's a suite. There's a number of apps there you can see. All right, a number of different thumbnails. Now, the ones at the top are for our subscribers. All right, they're for our subscribers of our tools. They're also for lifetime memberships. We have some lifetime membership buttons there for those of you that take some of our research products. But the one at the bottom there says Morning Report, okay? That's available for everybody right now. I said I was going to shut it down at the end of the year. I'm going to keep it open for a few more months. And once you get it, okay? It will not be something that we're ever going to charge you, All right, you're grandfathered into that. We might just not make it free anymore here down the road. Now, if you click on that, you have a number of different areas you can go to. There are actually 6 different reports that we offer. So some of our the stuff that we offer are, for instance, option volume. We can look at high option volume, and we can look at what's going on in the world of high options. We could also, if we're going to look at unusually high volume, let me just show you where to go with that, because I have this on my big screen too. So I'll pop over to the morning report, and I'm going to look at high option volume. And I could look at, Bank of America has options having high option volume. Ford, AT&T is on that list. As I scroll up in here, American Airlines, Mosaic, etc. But you can see these are the highest option, highest volume. AT&T, Bank of America, Wells Fargo. All right. Why are the bank stocks got high option volume right now? Because that's where a lot of money's going into right now. If traders feel like the Fed is going to raise rates, what companies is this going to be beneficial to? Well, banks, brokerages, insurance companies. That's why you're seeing the Bank of Americas and the Wells Fargos up here near the top in terms of high option volume. All right. Maybe you have a bullish bias. Well, we have something for you there too. Unusually high call option volume. General Motors is on that list. Okay. Disney. I was just at Disney, Eric. I was at Disney last week. I think I told everybody I was going to Disney.
Yes, you were. And you had a good time.
Man, we decided to do something different this time, Eric.
Okay.
Instead of being in the lines for an hour and a half. Okay, so there's 3 ways you can visit Disney. You can do the very inexpensive route, but trust me, you're only going to get maybe 2 or 3 rides in a day if you want to go on the good ones. Mm-hmm. Then you can do the Lightning. They call it Lightning Pass over at Disney. And that kind of puts you up to the front. But the thing is that what we realize with Lightning is you have to go into the Disney app, which is not easy. It's not as easy as Tom's Option Tools app. I can tell you that. that Disney
Self-promo.
App, you got to go into, you got to go into the Disney app and make an appointment to get to the Lightning. So you're still having to, go in and do that. We decided we were going to do the Kardashian method. All right. Not like the Kardashian bottom that some are talk about here on the live show. I'm talking about the Kardashian method where you get the VIP. Right. And guys, I got to tell you, when I looked at this first, I'm like, why in the world would I want to spend $3,000 on top of buying the park hopper tickets to do the VIP? And that's the low price. It goes up substantially, but we did it last week and it was a pretty good price. But let me tell you what you do. You take that, and then you take 9 of your favorite friends, take your spouse and 8 of your favorite friends, and you take 10 people. It's the same price. So what you're doing is you put it on a per ticket price, and all of a sudden it's not that bad. Here's what you get: you get carted around in a big van by one of the Disney reps, the VIP guys. They take you through the back door, so you see the employees behind the rides you want to take. He says, "What rides do you want to do?" We did all the good rides. I bet we did 12 rides in one day, which that was tiring, Eric. I mean, it was exhausting. It was exhausting in a different way. Instead of being exhausted standing in line all day, we were exhausted because we were running from one ride to the next, and the guy took us through the back doors. Anyway, it's a great way of visiting Disney if you have older kids that like to do rides, because he can get you on as many rides as you want. It was fun. It just was fun in a different way. Anyway, I got off topic. I only talk about Disney because you can see there's unusually high call option volume coming into Disney right now. Disney's kind of looking like a value play, being that it was much higher. It's had some pullback, and now, it's back on that. Disney's making a run against the Netflix and the streamers out there because they're continually adding more content. What was I doing last night with the family? Watched Doctor Strange, watched the Eternals. We saw that. And where am I going? All right. To where Disney's really going to start to continue to increase market share and increase revenue right there with their online offerings. Okay. So that's one way we could do that too, Eric. We could get into things like valuations. We could look at unusual puts if we think the market's going to drop. But what I really want to focus on is being a buyer of options. And on all 6 of these lists that are updated every day, this is where I want to take my focus. I want to go into cheap IV. All right. Now, all of us in the room, okay, everybody in this room has somebody in their family. All right. Here we go. We have somebody in our family that is just downright cheap. Right. We all know who we're talking about here, right? That the person that always goes for their wallet last when they're out. The person that's always the miser. And I'm not talking about being thrifty. I'm talking about being cheap. Okay. Eric, you have anybody cheap in your family?
I mean, everyone has someone cheap in their family. The question is that we all have to ask ourselves or make sure that we're not, is that cheap person? You can't be the last one. You can't be the one getting up to use the bathroom when it's bill time, when you're out to dinner. You don't want to be that guy or that girl.
Yeah. So where I want to be cheap, where I want everybody to be cheap, is I want you all to be cheap when you want to be option buyers. Okay. That's the time to be cheap. And so here's an idea about how to be cheap. We want to look at all of the stocks, and I've got stock symbols and ETF symbols here. These are the top 10. Starts with SLV, goes all the way down to PLL. What do these all have in common? These top 10, what we do is we go through and we monitor option prices throughout the year. And we look and see, where have they been their highest in what we like to call implied volatility? Where have they been their lowest and where have they been currently? So, you know what? Before I go any farther, Eric, I probably ought to do a little walkthrough with these guys. What do you think about IV?
That's Tom. If you need me to add some time to the timer, I'll do that for you. You are the boss. After all, this is your show, so take as much time as you need. I'll adjust.
Yeah, well, I mean, I think we'll be good, but let's just see. So, I mean, I want to talk about option pricing for a moment. So there are many components that make up an option price that eventually tell me whether something's cheap or expensive. Number 1 is the underlying asset price. Okay. Number 2, the time until expiration of an option. If we got more time on the clock for an option, it's going to be more expensive. Implied volatility, which I'll get back to. And then there are things that represent a very, very small part of an option price, and that might be interest rates, dividends, things like that. Now, those of you that are brand new, and I'm going to ask the question, who in here is new to options? And I'm not talking about you've never seen it or heard of it before. I'm talking about new, meaning that pretty much the only thing you know about options is it's just like a stock, but cheaper. If you fall into that category, let me know right now in the chat box. Eric, tell me who you see in the chat that is screaming, I'm new. I have trouble understanding what option pricing is all about. Help me out.
Tom, we have a lot of people dropping in there that they're new. We have Jerry, Fiss. We have new members that don't even have names yet. We got Ashraf, me, tons of new people, which means there's a lot of people that need to learn, a lot of people that you need to teach.
Yeah, same with the YouTube group too. We got a lot of new folks that are on YouTube that on the YouTube channel that just they understand how to buy and sell an option, but they don't understand the mechanics of what affects that. And so, think about this, guys. All right, I'm going to make it real easy as I can for you. All right, everybody understands car insurance, right? Other than the fact that, you've got to pay it, you got a premium, you got your car. All right, I want you to think about the underlying asset price of an option, of a stock, all right, to the car you drive. If you drive a Nissan Sentra, all right, you got a Nissan Sentra over here, you got a Tesla S with the ludicrous mode on the other side. Well, one car is much more expensive than the other. Therefore, the option pricing behind it's going to be more expensive too. So, if I were to look at a Tesla and a GM car, all right, a GM, maybe a Volt, all right, both two cars, both designed to get you from point A to point B. One might get you there a lot faster, might look a little cooler, all right, but it's also much more expensive. Guess what? The options on that's going to be expensive. And in terms of car insurance, the car insurance on the Tesla, much more expensive than on the Chevy Volt. All right. Time until expiration. If I do a month-to-month policy, it might be cheaper month to month. All right. If I do a 1 month policy, a 6 month policy, if I do a 1 year policy, it's going to be more expensive too. However, I might get a break on the 1 year policy by paying up front for a year. Same thing kind of goes with options. Now, implied volatility. I want you to think of implied volatility like the driver of the car. Okay. If I'm driving the Tesla, I might have a lighter foot than if my son gets behind the wheel, or it's definitely my nephew. He just hits the floor. He puts it to the floor. He wants to see what the launch mode is. He wants to turn it off. I want my mommy mode. That's what we have it on. I want my mommy mode, so it doesn't do 0 to 60 in the low 2s. It does 0 to 60 in the low 3s. You turn I want my mommy mode off in Tesla, and all of a sudden you're in a rocket. All of that has to do with option pricing. Think about a driver. You think a 22-year-old driver is going to pay more for premium than somebody like me, which is more than twice their age. This is the same thing with options. If you're looking at for instance, let's think about a stock. Oh, well, I'll go over here to the right-hand side. See Peloton? Stocks all over the place. Expensive options. We'll cover these tomorrow. SLV, that is like the slow moving instrument, and therefore the options are going to be cheaper. So let's focus on SLV for a moment. All right. There's a lot of reasons why IVs get cheap or expensive. One of the reasons you might see a stock get cheap and then get expensive is event-driven markets. For instance, we're going to be talking here in about an hour to our Operation Surge Strike members about event-driven markets. And man, if we up the number of trades in that research alert service, we're doing, I think, an average of 3 a week. That's how many there, and especially now that we're in season. So, it's just a matter of picking the right stocks where we see that event come into play and those options get more expensive. So what we're looking for over at Operation Surge Strike, Eric, is we're looking for these cheap IVs to become these expensive IVs. We want to buy them when they're cheap, and we want to sell them when they're expensive. But for this particular group right now, let's back it off a bit. Let's talk about cheap, and let's look at SLV. Okay, so if I click on SLV, I open up the chart to SLV, and you can see here, this is just not even a 6-month chart. This looks like about a 5-month chart. You can see back here in September and Labor Day, we saw the options. Now, this is the price of SLV. This is the candlestick, and this is the option premiums on SLV, right? So at one time, the options were down here near 20, right, which was ultra low for option premium on SLV. Now, SLV was higher, but look what happened was when silver dropped, the price of the options got more expensive because panic set in. As we were seeing the price drop, a lot of folks were going, where's it going to go? Where's it going to go? And as something goes down, a lot of cases, you see the option volatility, the nervousness, the panic set in, and it jumps option prices. You might say, well, 20 to 23 isn't that much, Tom. That's 15%. That's a big deal when it comes to silver and gold. Back down as silver went up. Silver went up, and SLV hit a high in the last 5 months of 23 at 30, or excuse me, 23 and a half. Then silver drops down. Now I'm on the wrong side. I've got stock price on the left, and I've got IV on the right. So if you see the IV go from 30 down to low 20s, that's a huge drop. What that means is, let's say 30 to 23. So Eric, 30 minus 23 is 7. We see 7 basis points come off of the high of implied volatility from December to now. In literally a month, you've seen the price or the IV drop, I want to say about a third. So we've got a third off. Really, if you take a look at this, 7 points off. Yeah, about 25% off. And so if you saw something in the store one day and you really wanted it, and then the next day you went in and all of a sudden it was 25% off, you'd be more keen to buy it. that's what we're looking at with SLV. So if you think that gold and silver are going to break out and start to move higher, this is what I'm looking at to determine whether or not I want to buy the options. And SLV shares, those shares right now are much cheaper. They're much cheaper than they've been. Right? This is important to know. Now, I can do this with the top 10 stocks. So take a look at our top 10 cheap IV right now, and I'm going to leave it with this. SLV is at the top. We've got PBF, SM, LYB, TEX, AGO, GBX, CBT, SA, and PLL. Now, some of these are ETFs. I see a couple of these are in the gold and silver areas. So what's happened is gold and silver and their ETFs have kind of lost their luster with the community. That's a good thing. Now, likewise, if you think that gold is going to be replaced by crypto and that silver is going to be replaced by crypto, then maybe you're thinking that these two assets are going to go down in value. Well, this would be a great time to buy puts if you believe so. So whether you're bullish, whether you're bearish, the cheap IV area tells you these are the options to be looking at buying when you're out there. Okay. So, Eric,
I think you did a great job.
Questions?
Oh, I wasn't looking up at questions, but I could scroll through and look for questions as we get into the next segment. But you broke that down really well, so that someone like myself that really doesn't get an understanding, I like how you broke it down about the 25% off. You jump into the store, same way of looking at it. So that was cool. Well done, and thank you.
All right. Well, so why don't you do some scanning for me for a couple questions real quick?
Yep.
And what I'll do is, what I want to do is, we looked at these unusually low priced options. I'm going to save expensive for tomorrow, but you can see Peloton. Peloton's actually been up at the top of that list for some time. I'll talk about what you can do with the right expensive IV. All right. But I'm going to save that conversation for tomorrow. For today, let me take one more here real quick, and then Eric will see what you're seeing. But let's take a look at SM Energy. Now, again, here is the common denominator, and I say common, not always. Notice when this stock price rises, okay, stock was at 20 back in the middle of September. It ran as high as 30, almost doubled in value. Look what the IV did. Now, the IV wasn't extremely high here. It was trading around 82. And for example, it is high when you look at it as a number. If you look at it as a number and you see 82, compare that to the VIX, and you might say, "Wow, that's like 4 times as high, Tom, maybe 5." But look what it did. It dropped down as SM went higher. So as SM was climbing into 30, 32, 34, 36, 38, look what the IV was doing: 84, 82, 80, all the way down into the low 70s. Then SM pulled back. When SM pulled back, option traders got a little bit edgy, and the options jumped in value. Then SM leveled out, started moving higher again. And you see what happened up until Friday. We saw from around 89 in implied volatility down to 72. That's a significant drop. Look what happened today. So what happened today is we opened higher, and now it's been selling off, and we saw this implied volatility jump. It leapfrogged from the low 70s to the low 80s, just in a matter of literally the first part of the day. So that's what we're seeing going on there. All right. And you know what, Eric, also, before you have a few questions, let me just set this up for everybody. If you have a chart that you want me to look at, now's a great time to put your favorite stock symbol in. We'll be doing chart requests here in just a few minutes. Eric, what do you got?
So we got this question that came through from Farouk. It says, what's the relationship with the underlying price and option price with upward or downward momentum? I like this question because I don't even know the answer or really what they're talking about. So I figured it's a good one to ask you, Tom.
Yeah. You know what? Let me go home, and I'm going to go home. I am home. Let me go to Tom's Tools home, because what I want to do is I want to go back to the stocks for a moment. And I'm going to actually go to my charts. And we're going to bring up the very first chart I talked about this morning, which was the S&P 500. Now, what I'm going to do is I'm going to take SPY. I'm going to turn off all of the minutia here. Okay, the Fibonacci, stock chart peaks, Maybe I'll leave the volume stuff up. And you know what? I even want to turn off the moving averages because I want everybody to focus on one thing. And we talked about the relationship between asset price and IV. This is going to be almost always the case. I kind of mentioned it before, but if I turn on an overlay and let's look at short-term options. There you go. Now, what I want to do with short-term options, I want to take a look at them relative to this chart right here, Eric. So again, left-hand side, and let me try to get this as best I can. Left-hand side is the price of SPY. And I'm also looking at the candlestick. That's actually the chart of SPY. Now, there's a red line that moves up and down in here. What we do is we take all the prices of the near-term calls, the near-term puts, that in this case are between 7 days to expiration and 30 days to expiration. All right, we then kind of average them together and we assign them a percentage. Okay, and as you can see here, we look at these every day and we attach these percentages together and we create a closing price of the option prices. All right, expressed in a percentage, you can see that down here, the option prices were real cheap. Well, what's going on above them? The price of SPY was getting higher and higher and higher. And as you can see back in October, we jumped up and we were hitting some new highs for that point. Then we kind of leveled out. Option prices were leveling out down here. They were cheap. If you notice, they were down here between 10 and 11. What happened in November after Thanksgiving is we went from 470, we jumped down to 450 very quickly. Look what the option traders did. They got all nervous and they pushed the premiums up from a 10 to a 26. What that meant was during this literally 1.5 week window, option prices doubled in value. So if you were looking at a 7-day option and it was on SPY and it was trading for $3 for an at-the-money call or an at-the-money put, a week later, the 7-day option was trading for $6 because it was just telling me that option premium, that time premium, doubled in value. So if we were looking at the monies, realistically, an at-the-money option doubled in price. Look what happened afterwards, Eric. We kind of snapped back and the options dropped right back down so that we saw that big decay in implied volatility. And that's what you and I see as time decay. You might wonder sometimes, how come time drops much faster some days than it does on other days? It has a lot to do with the fear and greed that happened surrounding the actual index itself. Let's look at what's happened most recently. Very low coming into the beginning of the year. We were right here. You remember the beginning of the year with the markets? I mean, we're only 2 weeks in, but you can see we kind of moved sideways and then we had that drop down. Here's sideways. As we drop down, implied volatility, option traders pushed the bids and offers higher. And we've gone from, at the beginning of the year, we were trading just above 11. Now we're at 21 as the markets are coming down and trying to find some support. So that's really the answer, and I apologize for taking that much time on the question, but that was really the answer on that question. You have anything else, Eric, or are we going to jump the charts?
You know what? Let's take one more really quick, Tom. I got one more that won't take you too long to answer, I don't think. Tom, how do you exit a debit spread?
Perfect. I exited the reverse way of putting one in. So if I were to, for instance, buy to open, and you know what we'll do? I want to take that. I'll take it a little bit farther today because I've got a trade for everybody. I want to share a trade with everybody today, and we'll look at a debit spread as at one of those examples on the trade. So last 5 minutes of the day, I'm going to show you guys my trade of the day. It's going to be a little aggressive, but we're also going to be looking at taking advantage of something that's a little more diversified, so we're not jumping into one stock.
Sounds good. And
right.
I guess that means we'll move on to our chart Q&A. Is that what you want to move on to next, Tom?
Yeah. Let's spend a good 10 minutes on that one.
All right.
If you like there, Eric. So I'm going to have you call them out. Give me the name and what the stock is that each person wants to look at, and we'll start right now.
That means everyone in the chat throw the symbols that you want to see. And the first we have in here is from Quaid. He wants to see Tesla, Tom.
Awesome. TSLA. And Tesla, is One of the ones that we look at on a regular basis, and that is with with the FANG. I mean, I kind of throw that at the end of the FANG. I call it FANG T because it's one of the most popular. We're looking at Tesla right now. Now, I can look at Tesla a number of different ways. First of all, if you see Tesla, we've come, and I'm looking at 100-day charts here, guys. So we've definitely seen Tesla go from that low at the far left-hand side of the chart at 700. 1250 was what we came close to. In fact, we came above 1200 just 2 weeks ago. We're settling into an area, where it's almost kind of like it's acting like a coiled spring. Here's the interesting thing. Take a look at implied volatility. It's literally been moving with the price. Remember when I said commonly stocks, when they go higher, IV goes lower? Not with Tesla. When the market goes higher with Tesla, the option traders, the greed index is what pushes up those prices. And as you can see here, IV is going up. Now, the reason IV is going up lately with Tesla, if I were to zoom in on this chart, you know why it's been going up lately? Because we got earnings coming out in about a week. So you're going to see the option traders continue to push the prices up on calls and puts until the earnings are announced. The other thing I want to pay attention to with Tesla is what it's doing relative to Bitcoin, because Tesla is one of those, we're going to call it a cryptocurrency stock, right? They allow cryptocurrency to be used in some of their merchandise. They've put it on, you can buy the car and then you can't buy the car. And, it's kind of questionable whether you can buy a Tesla with Bitcoin or not these days. It's on again, off again, but it's definitely, and they've got a good bit of their money put into cryptocurrency, like MicroStrategy, for instance. And therefore, the price of cryptocurrency will dictate a lot of times what Tesla's doing as well, right? One of the things I can do here, Eric, is I'm going to pair this to BTC. So I'm going to pair it to BTC. I'm going to update once again. Take a look at this. While BTC, see how BTC hit its high? And Tesla was just off that high. Then BTC dropped. So did Tesla. I have BTC in a black and white chart. I have Tesla in the colored chart, the red and green. As you can see, we saw a little bit of a bump back up above 50,000, and that kind of helped push Tesla up. But now Tesla's kind of leaning down because BTC's been leaning down. So where do I see Tesla going? Long term, it's not going to be about the cars. There's no way it can be about the cars. Tesla's doing a great job moving the bell forward for electric vehicles, but eventually the GMs, all right, the Fords, and the overseas automakers are going to make a run at Tesla. Tesla will always be, I think, the pioneer, the one that continues to push the edge on technology. But it's not going to be about the cars. It's going to be about the batteries. It's going to be about the infrastructure. And that's where I see Tesla really moving to in the future. All right, so that's Tesla.
Yeah, we have a few people that want to see Mara, M-A-R-A.
Oh, another cryptocurrency related stock. Let's go. Now, the only issue that I have as we go and look at these for the next 6 minutes, Eric, is that they have to be optionable stocks. So if you give me something that doesn't have options on it, I don't look at those. Okay, so I'm just going to tell you, I'm not a fan of stocks that do not trade options, and therefore I don't even look at them. Okay, so here is Mara. Take a look at this. If you want something that moves, if you want to buy Bitcoin but you don't want a Coinbase account, Mara is what you trade. I mean, these charts are literally stacked up on top of each other. Now, going back, and I'm using August 26th here as a start date, they were literally moving lock and step until we got to around November. Then Mara jumps and makes a new all-time. I mean, Bitcoin hit all-time highs in November, but Mara really hit the all-time high. The earnings came out. They were not a big fan of earnings, but as you saw, Bitcoin pull back slightly. Mara pulled back from 80 down to 65 in one day. Again, it had a big move like that a couple days later where it opened at 72 and closed at 55. Big moves down. Since then, it's been dropping with Bitcoin. It's now underperforming Bitcoin. So here's the thing. If you like Bitcoin and you see Bitcoin breaking out to new highs, it looks to me like, based on the 100-day chart, Mara has actually now dropped below BTC. is now trading under. It's been widening under. So there's a potential arbitrage play here, if you will, if you want to call it that, between Mara and Bitcoin. So Mara looks like a good value play. Earnings are coming up in 57 days, so you got to keep an eye on that. But there you go. What else you got for me, Eric?
Yeah, we had, I'm pretty sure you could take a look at Ford for us, couldn't you?
Oh, yeah, absolutely.
Thought so.
One of our biggest, and I'm going to leave Bitcoin on here too, so you can see the relationships and the non-relationships, especially with Ford. Ford's not tracking with Bitcoin at all, and so you can see this one's not a Bitcoin play. It's more of a play on technology, and it's a play on Rivian, and it's not even Rivian so much anymore, but it's a play on Ford now finally trying to catch up and looking like it's going to catch up to Tesla in terms of technology. Wow, isn't it amazing? I mean, Ford, I remember Ford as a $5 stock for years and years and years, and this thing finally decided to come to the party. Earlier this year, $13. Significant numbers in my mind was when we hit 20. We hit 20 and bobbed back and forth above 20 like a bobber in water. And then, here you got the little pull from the fish, and then so you got 21 and a half. Well, we went above 21 and a half right after New Year's, and it just really hasn't looked back. I would look at support on this to be around 23 and a half and 22 and a half, which was the gap move that happened earlier this year, and then the support that's been holding relatively behind that. But wow, I mean, Ford's just really, really looking good. Maybe if anything, it may have come a little too far too fast, and so I would expect pullbacks to get back down to below 23. But as long as it holds that line, looks really good, even if the markets in a whole do tend to roll over.
All right, Tom, I think we have time for one more before we move on to your Tuesday's top pick. And I'm going to choose Landon because they are a member of a service somewhere. We got to give a little bit of love to our people and our subscribers. So he or she, not sure, wants to see NVIDIA, NVDA.
Oh, awesome. NVIDIA. And probably a good one to look at with cryptocurrency too, because you think about what does NVIDIA got to do with cryptocurrency? Well, it got a lot. The graphics chips alone, or what are used to the processing speeds to help mine cryptocurrency. And it's funny, Eric. I was just talking to my brother-in-law is a big Sony PlayStation freak. In fact, he buys old Sony PlayStations, buys them in bulk, and then puts them together and sells them out. It's like it's almost like he's just kind of buying the old versions. He's pulling the cards out, putting them together, selling them again. It's something he likes to do in his spare time. And he tells me that he says, some of the old NVIDIA cards that are in the old Asus laptops and Asus gaming are 10 years old, and they're selling like they're brand new. And it's because of that graphics card that's in there. And it's because of that, because people want those, and they're trying to put together, their own version of a Bitcoin mining machine. Mm-hmm. Anyway, take a look at NVIDIA. Time. Yeah, you can see NVIDIA moving up with cryptocurrency. Then it started to deviate a little bit here before and just after its earnings. Had great earnings, blew it out, and then it went up to as high as almost 350 before taking a little bit of a break, falling back down. I mean, we've come off 80 points off of its high. But a lot of this movement, again, folks, is because of the lower chart. BTC's been moving lower. So, again, it's not the best. It's not the best play if you're long on crypto. But if Bitcoin is bottoming, if Bitcoin is going to make a run back to 50,000, then I see NVIDIA back to 300 just like that, right? That's what I see with NVIDIA.
All right. Well, it looks like we're getting towards the end of the hour, and we need to take a look at your Tuesday's top picks. So let us know what you got in store for us here on this fine Tuesday.
Yeah, so if you're part of Rocket Wealth, if you're part of Money Calendar, if you're part of Operation Surge Strike, if you're part of any of our research alert services, you've already got the picks that we have. Those I call them those alpha picks, where we look at stocks, stock options, We're looking into the cryptocurrency markets for our next play on crypto. But for everybody that's out here right now, all right, let's back up and let's talk about that 40,000 foot view once again. So if I'm at the 40,000 foot view and I'm looking down and I'm trying to figure out where to go, this is one of the best, easiest ways to go. If you're aggressive and you think that the market move is close to over on the pullback. If you don't believe the market move is close to over on the pullback, then mute me right now. Because if you think the market move is over, and as a pattern trader, I have to follow patterns no matter what's going on the big screen. All right, when I look at the big screen, market sell-off, red. I mean, it's just, one thing or another. You take a look here, QQQ has got a very interesting buying opportunity between now and February 17th. All right, when I look at this, a couple things I'm looking at is that every year this pattern's just gotten better, 9 in the last 10 years. It's averaging about 6.25 a trade every year. We could look at that. Especially in the last 3 years, that average has been around 12.5, but let's call it 10. So we're going to look at the Qs going up 10 points between now and February 17th. I can then go in and look at stock option tables. And if I go to the stock option tables for today, and I go out to an option, the Feb 18 options are the ones I'm most interested in because that coincides with how long this pattern is in place, right? Qs are trading around 373 or so. A couple things we could do here. If I look at the 375 calls for a moment, all right, and I expect this to go up 10 points between now and February, well, the call options are trading for $10.58. That is absolutely insane. Why would I buy something for over $10 when I'm only expecting a 10-point move? I'm going to be trading money if I do it that way. So what I want to do to lower my cost, lower my risk, increase my probability, and really take it, try to hedge the volatility risk, which is in here, is with a call debit spread. And a call debit spread allows me to buy a lower strike call, right, like the 375. And maybe I go in and I sell the 380. Now, the 380 allows me, again, let me bring this into place so everybody can see it. If I buy the lower strike call and I sell the higher strike call, I'm doing this for a lot less cost, a lot less risk, and all we got to be at to max profit is 380 or more, nowhere near the 10-point move that I suggested just a few minutes ago. Spot the opportunity, create the alternative risk trade, and then what's the final? Plan, exit, and manage the trade. And so I want to do that right now, and I'm going to slide over one of the brokerage services that I use. Here you go. I got QQQ in here, but I want to look at call spreads, not put spreads, call spreads. Now, as I set this up, I'm going to be buying and selling to open. I want to buy again to open the February 18th. And let's look at the 375 calls. And let's look at selling to open the February 18th 380 calls. A little bit more. Here we go, 380s. And here you go. So check this out, guys. Here's my bid and here's my offer. And let's say I want to do this. If I'm looking at 375, 380, that's a 5-point spread. If I want to make a double your money trade, then what I need to do is put a limit order in. A limit order, and this is a day-only order, to buy this spread. This is called buying the spread for $2.50. Now, I put that in. It'll confirm. I place the order. This is going to go in as an open order. It's not going to get filled. Not going to get filled because look at the price. Right now it's trading around 266. I'm going to need the price of this entire spread to drop a little, come down for me to get filled on this trade. If I'm filled, back to the question, Eric, that said, how do you get out of a limit trade? How do I get out of this trade? If I'm filled, I'm going to then create what if I want a 50% return? Let's just do it that way. So if I'm filled, what I'm going to do is I'm going to sell to close. I'm going to sell what I bought, and I'm going to buy back what I sold. And then what I want to do is I want to do that for a credit, all right? And the credit I'm going to be looking for is if I get filled for $2.50, what's 50% of $2.50? $1.25. Add that to $2.50, and that's what I'm looking to get out at it for, $3.75. So what I did was I created a trade where I'm going to buy the 375 380 call spread for $2.50. That's $250, folks. All right, that's 1/4 of what those call options right up here cost. And what am I looking to do? I'm looking to sell this if it goes up 50%, and I take a 50% profit, sell the whole thing out for $3.75. There's your 50% profit, Eric. All right.
Yes.
Hey guys, I am out of time.
You are Tom, but we're gonna be back, man. We're gonna be back, but not here. We're gonna be in the Surge Strike room, and you know we don't want people to miss out. So I'm conveniently giving you guys the phone number so you can call up and be part of this with Tom and me.
Yeah, we'll be in the Surge Strike room. We got a lot to talk about. Mike and I got a lot to talk about in the Surge Strike room. So we'll see you here in a little less than a half an hour for those of you that are our premium members. If you're not, you know how to become one. And if you sign up now, I'll see you too at 1 o'clock. All right. For everyone else, we'll see you tomorrow. Same time, same channel. Talk then. Bye now.